Hello, everyone. Welcome to Cryptonize. Joining me is Alan Silbert of INX. And as you know, we've been moving more and more towards security tokens because the SEC has spoken. The crypto industry has proven it can't regulate itself. I mean, let's just face it. A lot of you are mad at me about this, but we have failed to police the FTXs of the world. And so this is what we get. We get regulation. And when there's regulation, you got to follow rules. And when you have to follow rules, let's develop a space that's already been there and what I've been talking about, which is securitizing assets.
Imagine you want to invest in a big successful company like Tesla or Amazon. You love the Cybertruck and believe it'll be successful, but you're less excited by the Model 3, where competition is heating up. You want to participate in the lightning growth of the cloud. It's the next big thing. But you don't believe Amazon has a chance in the streaming business. Wouldn't it be great if you could invest in the success of specific business ideas? Very soon, that'll be a reality. Introducing security tokens.
In my case, it's more about security tokens around real estate. Really, you could do anything, but real estate seems to be the most natural for me. I've got a real estate background, as some of you know. But before we jump into this, let me introduce Alan. And Alan, if you give us a brief background on yourself.
Sure, absolutely. Thanks for having me. My background is in traditional finance. I worked in commercial lending for over 20 years. And right around the time that was becoming boring to me and it wasn't challenging anymore, I got introduced to Bitcoin in about 2013. So back then, you had to go to the drugstore and pick up the red phone for MoneyGram and then go give the cashier dollars and send your Bitcoin, your money to a Bitcoin exchange like Mt. Gox. So it was definitely early days, 2013. I didn't believe it was going to go anywhere at all. I definitely thought it was internet funny money at the time. And, as I dug in, went down the rabbit hole, usually everybody follows the same pattern of initially they have doubt, and then once they kind of get over the hump and delve in, they kind of fall in love with crypto. Was looking where to pivot into the space full time around then. For a little bit, I had a side gig with this website called BitPremier, where we listed Ferraris and villas and things like that for Bitcoin. So that was just a fun little side gig. And then I was looking forward to move into a full time gig, and I got introduced to INX in early 2018. So I've been here for 5 years. Back then, we were 5-person shop with not much money at all, and since then we've built a crypto and security token platform and done a lot of other great things we'll speak about.
Well, I was interested in security tokens all the way back in 2017. I think INX was just getting started, and it just wasn't ready. Most people were going utility tokens because the SEC wasn't doing anything about it, and it was a heck of a lot easier to go utility tokens back then. But now I think we've reached an inflection point. I think we have, Alan, you'd agree, because the regulation's coming hard and heavy. And if you're not obeying the law, at least here in the United States, you might be in a little bit of trouble or being fined a tremendous amount of money, just like Kraken recently was. So that brings us to our topic today, which is security tokens. And just briefly, what does INX do with security tokens? Does it list it? Does it help companies come onto the platform? Just in a nutshell.
Yeah, so we do all of the above. So yeah, like you were saying, about 2017 and 2017 was like the ICO boom and bust era. That's kind of the back on which INX was founded, because what you had was hundreds or thousands of ICOs that were, the issuers basically went to a law firm, got a couple-page legal opinion saying this is a utility token, and then they just went out to the market and raised money. And it seemed very Wild West to our CEO, Shai Datika. He figured that this wasn't going to last very long, or it wasn't going to end very well. And, indeed, thousands and thousands of investors lost a lot of money to outright fraud or just, mismanaged ICOs. This is kind of the double-edged sword of open source code, right? You can just take the Bitcoin code and you can tweak it a little bit and, make your own token. So we were founded on the back of that, and Shai Datika thought that, it could be done the right way under existing regulatory laws. And so we did things kind of backwards. We went to the SEC and we said, like, look, we want to IPO. We were pre-operational at the time, so it was a little premature, but we were pretty brave. And when we said to the SEC, like, look, we want to do a security token IPO for the general public. It'll be on the Ethereum blockchain. We're going to give our token holders a cut of our net profits. And the SEC was like, you're crazy, but we're not going to stand in your way if you want to give it a try. So we went on our way with the SEC. Took 3 years to get this IPO cleared. In the meanwhile, we were building our trading platform in the back end. So this company was always going to be everything under one roof trading platform for cryptocurrencies like Bitcoin and Litecoin and Ethereum, for security tokens, and also for where people to raise money as well. So while we went through the motions with the SEC, which took 950 days of back and forth, we built the trading platform ourselves, and the matching engine and all of its features, and then we actually got cleared by the SEC in August of 2020. First, right? So we were the first. We're still the only, which is kind of unfortunate, actually. We did all this work. We did all the risk disclosures. We got our audited financials. We set up a board of directors like a normal company, which is an independent board of directors by majority. And we had a successful raise. We raised with the general public about $84 million across 7,000 investors, many different countries. And so our token, the way we structured it, is the token gets a 40% cut of the net profits of the company, of trading fees and transaction fees, pretty much in perpetuity. The way we structured it is we have a contract with the token holders that can't be undone unless all the token holders agree, unanimously to change the contract. So they get a 40% cut of our net profits. We have a self-insurance fund that we diverted some of the IPO proceeds into, which actually backstops the exchange. Something goes wrong or we get bought out, the token holders get first rights to this cash fund, which is about $35 million. They have other rights like discounted transaction fees. But you can structure security tokens in a million different ways, which is the beauty of it, right? We've discussed with like Premier League soccer teams having like a fan token where their fans get a cut of game day revenues and merch revenues and things like that. We have one of the listings on our platform is for TruckPal, which is an app for the Chinese trucking industry, which allows them to communicate and share some economics with the token holders there. But yeah, it's the beauty of it is you can do it in a million different ways. Like for our token, the token holders don't have voting rights. They're not like equity, but they actually have more rights than equity where they sit. They're like debt holders. But that doesn't have to be the case. You can give token holders voting rights. You can give them revenue share. You can give them profit share. You can give them anything. So it's kind of like the sky's the limit.
Do you see more companies issuing this in lieu of stock options to their employees maybe in the future?
Yeah, I mean, in our case, all of our employees have tokens, so they definitely have some skin in the game. And it's definitely an option. And it follows along the same lines as traditional equities, the way that they're regulated and taxed and everything else. So it's absolutely an option.
Yeah.
If you want.
Okay, and then what about real estate? Do you have any real estate projects that are on your platform?
We're definitely constantly having discussion with real estate. It's a very sensical tokenization idea because sure, before, the general public couldn't have a piece of like an office building, I don't know, piece of the Empire State Building or you could tokenize a street of condos or something and people could have some exposure to that neighborhood. So as an idea for tokenization and kind of distribution to the public, it's a great idea. But then the real estate doesn't tend to trade a lot once you get it onto a platform. So it has its pros and cons. And you can do it with anything. You could do it with the art behind you. You could tokenize as well. Art was always something for the rich and famous, to invest in. The general public never had access to it. You can, tokenize like Spice VC as an example of like a token, like a fund that sells tokens in itself, so that people can have a share of the underlying investments that Spice invests in. So yeah, I can go on and on. There's just like so many different use cases.
The most interesting use case, and I never thought of this myself, was one you recently did with Turncoin, and where they're tokenizing one of their companies that sells virtual assets, and the security token gives you rights, I think, to the profits, if I'm not mistaken. You would know better than me.
Turncoin has a revenue sharing model. Ours is a profit sharing model for INX. Theirs is a revenue sharing model, and they have underlying kind of like NFT trading cards is essentially what it is. And they have a lot of different influencers and things like that, like Patrick Mahomes, and yeah, it's just yet another use case for tokens and what you can do with them. And it's when you have an underlying community or a fan base or a captive membership of users, then it definitely helps the economics, and it helps you have like a captive marketing crew basically that have it's similar to with INX. We modeled it. We gave this large chunk of our profits to our token holders because we wanted to embrace the community. We wanted them to kind of like be in it with us and essentially help market the company, help reach out and find other users. So there's many different aspects to it that these fan bases can bring.
So let's say I had a project. Let's say it's a football team, and I wanted to come to you to kind of turn the football team or some aspects of it into a securitized offering. How long would it take from beginning to end to see this through? And what are some of the major steps that I would need to take?
So there's a few different avenues to take for primary issuances as a U.S. Regulated broker dealer. So we can go, the route we went was the IPO route. Most expensive, longest process, most involved. So it's really for like the big players that have the resources to do it. And our prospectus is public record, so they could copy and paste our prospectus as a starting point, which we hope people do. Because we worked so hard on the risk disclosures for 3 years, and so the IPO is kind of the highest hurdle. These days, it's hard to say with the Gensler SEC, which we'll talk about later, but this could be a year process in normal times. Reg A Plus is another kind of option, also known as a mini IPO. Reg A Plus has some other kind of nice benefits, like you get exempted from blue sky laws. And you can go to general public and solicit things like a general IPO. And then there's easier lifts like a Reg DS, which we do a lot of, which I think all the listings on our platform right now are Reg DS, which what that means is it's kind of like a side-by-side offering. The Reg D part is for accredited investors only in the US, and the Reg S means you can sell outside the country to people in Europe, Asia, wherever, and it's subject to certain lockups. Outside the U.S., you don't have to be an accredited investor, but you have to follow the specific laws in each country and what you're allowed to invest in. It's not to the general public, but it's a very light lift. It's not an SEC reviewable filing. You do a PPM, you do a private placement memo. It'll show up on our platform alongside your offering, but it's a lot cheaper, a lot faster. The SEC generally stays out of your hair, especially because it's accredited investors in the U.S. But that's a pretty easy lift, and that can be done, in a few weeks and with a lot less money than an IPO or a Reg A.
Yeah, and so let's take the last one, the Registry Regis offering. Is that like a 90-day process? Is that a 6-month process?
Yeah, I mean it can literally be a few weeks if you can crank out a private placement memo that checks all the boxes. The burden's on the issuer. We take a look at things, but the burden's really on the issuer to follow all the rules and regulations. But it could literally be done in a few weeks or less if you have all your ducks in a row as a company.
There are some attorneys that can crank these out. They just use templates, and then they put your facts into it and make sure that you're covered, that everyone knows full disclosure what it is that they're getting into. And if you want a list of them, I can provide them. There'll be a link in the notes here. Okay, so once they're listed on INX, what services do you provide those companies? And customers. So, for example, do you do KYC? Do you have to do KYC in a Regis offering? What happens then?
Yep, we do. We screen everybody that gets onboarded. It's definitely the burden of a regulated company. The way the INX token was structured is that everybody gets whitelisted that is a token holder, so that it's based on the ERC 1404 standard, our token, which runs on the Ethereum blockchain. And what happens is if Alan tries to send an INX token to Mark, the smart contract queries the Ethereum blockchain, and if you and I weren't both whitelisted as onboarded INX customers, then the blockchain rejects the transaction outright. So those are some of the integrations that need to go into place when we list an offering. If they do ERC 1404, all the better, because it's our bread and butter. But once we're on our platform, we trade 24/7, 365. We also offer crypto trading as well. So we have everything under one roof. I think we're the only company that has crypto trading 24/7, 365, security token trading 365, general public access. We're clear to trade cryptos right now in 44 states and territories in the US. We're clear to trade security tokens in all 50 states. So, and we're probably the cleanest shirt out there right now in the space. So we're probably the preeminent venue for security token trading and crypto in the US is in terms of, round the clock, everything under one roof.
So if I had a security token that was issued by a company and INX was involved in listing it, I couldn't do a wallet-to-wallet transaction. I know it would check, like you said, the Ethereum, I think you said 403, to see if I'm whitelisted and they're waitlisted. But do I have to go through the exchange to exchange it, or could I do wallet-to-wallet?
Yeah, if both parties are whitelisted, there could be a way for them to exchange the tokens between them. We don't encourage that by any means, because we can't protect people if they do that. But if both parties were AML KYC screened by us, whitelisted by us, there's ways they could do that wallet to wallet.
Yeah, I know you're not encouraging it because of safety concerns, and it sounds like you might have some insurance on some of these things as well. We don't have to get into that. What I do want to talk about in our time remaining is Gary Gensler, and perhaps you have to be careful here. I don't know, but what is your thoughts on what he's doing and where he wants to shape crypto? Does he want to totally destroy it, or does he just want them to come in compliance with other stocks that are listed? Does he view crypto as a stock? I mean, in some cases, I think he does.
Yeah. So, look, it's been an interesting time for sure. This has definitely been crypto's Lehman moment, and and there's no bailouts coming. So, in contrast to when the big banks screwed up and made big mistakes, they just got government bailouts. Nobody was held personally responsible, right. and the world just kind of everybody went on with life. So here we had outright fraud in the industry, absolutely awful risk management, commingling customer funds with company funds, which is an absolute no, and basically in leverage and greed. So kind of all these things together. And then you have somebody like Sam Bankman-Fried. 1 in 3 people in Congress accepted donations from him. He was their kind of fanboy as who was supposed to be regulated. So a lot of embarrassment, I think, by the government for kind of being asleep at the wheel. And so the reaction now is to go totally overboard the other direction. I don't have to parse my words too much. We wrote a letter to the SEC recently, kind of outlining some of the things that we see are challenging and problematic in the space. And part of it was like the regulatory anxiety that they're causing. This isn't the right way to go about it. The Gensler SEC is, we had high hopes when he came in. He used to teach crypto at MIT. He's pretty crypto knowledgeable, but this is a very heavy-handed SEC administration. And I think what the outcome from what he's doing now is going to be essentially scaring everybody out of the U.S. onto unregulated exchanges. So I think it's not really the outcome that I think that they want. Um, and it just gives people more regulatory anxiety in the U.S. Like Gary said, come talk to them, but you have companies that are going to talk to them and that are currently under threat of a lawsuit from the SEC. So it doesn't really engender like let's go knock on the SEC's door. So yeah, we have a long way to go. I hopefully we're going to be close to rock bottom soon with all of the regulatory actions, but it definitely puts a pall over the space. It's I've been through several crypto winters. We'll weather this one as well, and everything cycles in life: traditional market cycle, crypto market cycle, and you have kind of Bitcoin at the center of everything, which is kind of the anchor because it is absolutely decentralized. The government can't do anything about it. And it kind of tends to keep things moving, keeps things going in the space because it's kind of the anchor of the space. But in terms of securities, in Gary Gensler's opinion, pretty much everything's a security, like no matter what. Every product under the sun. There's plenty that I disagree with what's going on right now, and we'll see how it kind of parses out. Maybe the silver lining is that this will work through the courts, and one thing that has been kind of problematic in the space that we've faced ourselves is that there's no court precedents for anything because it's so new. So so what we're doing is taking like securities laws from 1933. And that's like what our IPO is based on, the securities laws from almost 100 years ago. And a lot of different things that have to do with the security token law or, accounting precedents or taxes or many different things. There's just a giant gray zone. So maybe the silver lining is we'll get some favorable court motions out of this, court conclusions that'll kind of give us some precedents that we can hang our hat on in the industry.
Yeah, ironically, Gary's saying everything that you need to know about crypto is already contained in the laws. I think he's referencing the Howey Act and the Howey test. The problem is crypto also has utility. Stocks don't have utility. Crypto has utility. Most of it has utility. Of course, we know the scam tokens and the meme tokens. I wish they'd all go away, but that's just my opinion, folks. So when he says that the rules and regulations are already in place, it's not true. These things need to be treated differently. We need to have we need to have regulations that we can look at to say, okay, this meets the test, this does not. Make it easier for everybody. And those that even come to the SEC, like you did, they're fearing they're going to be investigated. But when they want to do what Kraken was accused of not doing, which is sign up with the SEC and have these disclosures, the SEC's turned every one of them down. Maybe there's a few that have slipped through. So on the one hand, Gary's saying, hey, come register. On the other, you're turning them down. You can't have it both ways. The hypocrisy is off the charts. I do agree with Gary that disclosures should be made in the terms of staking. But my God, allow them to register and then issue the disclosures. And if you turn them down, tell them what they need to do in order to meet the requirements. It's a crazy world. So don't believe what Gary Gensler is saying out there. To a point, he's right with disclosures, but then you got to let them disclose. You got to let them sign up, and you have to approve them, and you have to allow them to obey the law as Gary Gensler sees it. I think Congress is going to step in. They already have tried and perhaps shape this into something that makes sense. I believe security tokens and securitization of assets are the future. I like what INX is doing, and I think you guys don't even realize what rocket ship you're sitting in.
Yeah, we just want to be ready for the next crypto summer when that comes around. So, recently we launched a book. It's called The INX Way. And so, we learned a lot of things over our journey with the SEC and just through discussions with issuers for the last 5 years. And, what we think one of our biggest assets at INX is our expertise, really. there's a lot of bad advice out there, and there's a lot of education to be had. So we wanted to put everything that we learned into a book. It lays out the different kinds of offerings like we discussed before: IPO, Reg A, Reg D, Reg S. Gives different use cases for security tokens, and it's just kind of like the Bible of security token issuing and trading. So if people go to inx.co, pop-up will come right up. They can put their name into the queue to get a copy of the book. So yeah, I just wanted to throw that pitch in there for our new Bible token masterpiece.
Excellent. Well, I think a lot of people that are interested in security tokens will read that, and we'll put that link up on the screen. You should have seen it already, and then in our show notes. But with that, Alan, is there anything that we didn't cover that we should have covered in terms of security tokens and in the direction that INX is going?
Well, one interesting thing that's it's another kind of, silver lining, but is what's come up as a result of the upheaval of the industry is that, a lot of these companies you've heard about, the Celsiuses and the Voyagers, FTX, have filed for bankruptcy in the U.S. And, it depends how long you've been around the space, but at one point, Bitfinex, the exchange, got hacked for several $100 million. And to kind of make it right with their users, they created a Bitfinex token, which basically, you got a pro rata for how much you lost in the hack. And then over time, the idea was for you to earn back what your losses through profits of Bitfinex. So there is a similar opportunity now with some of these companies that have filed for bankruptcy in that, instead of just saying, all right, user, you get 10 cents in the dollar and goodbye, and that's all you're getting, there is the opportunity to do what we call a recovery token. So you can't issue a security, structure it, however you want, X percent of profits over X number of years. There's an infinite different number of ways you can structure it, but because of the code of the bankruptcy law, you can actually fast track this through the SEC, which is especially in this environment, and especially with how nascent the industry is and how long a security token registration takes. It's actually a very, very compelling use case. That if people do want to issue a security token as part of the bankruptcy settlement, the bankruptcy court will usher it through the registration process through an exemption, and I think it like crams the time period into like a couple of months that you could create this recovery token, push it through the court, and get it issued to the creditors and to the users. So. It is something very interesting that's kind of come out of this last several months, and we've had a ton of discussions with some of these bankrupt companies that are restructuring, with investment bankers, and so it's on a lot of their radars. But it's a very interesting use case that's come up recently.
Do you have a case study on that, or anything that would walk somebody through that process?
Yeah, I think it's in our book as well, but we're glad to speak to anybody to kind of brainstorm over the different ideas that we have about it. So we're happy to talk to anybody about it as well. Like everything else that we do, it's kind of on it's a cutting edge, nascent product for sure, but it's very much a valid use case.
Yeah, it sounds like it. Yeah, and it helps everybody. Everybody wins out of that situation.
Yeah.
Okay,
so.
Alan. That's all the time we have. I want to thank you for being on the show. Very informative. This is the direction, folks, that the industry is going to go. Bitcoin will still be there. Ethereum will still be there. But I believe because of regulation, at least here in the United States, this is for the path you should be looking at and potentially investing in. Much safer, too. I'll tell you that. So again, Alan, thank you very much, and look forward to catching up with you in the future.
Thanks for having me. Appreciate it, Mark.
Hi, I'm Mark Fidelman with Smart Blocks. I'm giving you my tip of the week. This is the crypto tip of the week. It's called TetraGuard. You can see it right here. This is the world's first decentralized crypto ETF, which has Bitcoin, PaxG, Ethereum, and this fee token called Quadrant. You want to learn more about it? Go to tetraguard.io. This is a big buy for you right now.